Hi, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to welcome you all back. And so let's get started with our analysis. Like I said, this is going to be probably the most important analysis we do today and for the week probably, is just trying to figure out where, certain places to buy or sell the euro dollar is today. So let's take a step back for a moment and let's remove a few things here. All right, so let's make the assumption, okay? Let's make the assumption right now that the dollar does weaken following the FOMC decision. Okay, for whatever reason, you can say, all right, Blake. Well, the dollar is going to weaken because the Fed didn't raise rates. Okay, great. The dollar weakens. Okay, if the Fed if the Fed raises rates and people go, oh, thank God we got that out of the way, the dollar spikes up, so the euro drops really quick, and then it spikes back up again, and you start to see the dollar weaken following the rate decision. Great. Okay. So let's just make the assumption that the euro does rally today. Well, where do you think, looking at this chart, where do you think it's going to go? Because I'll tell you exactly where I would be on the short side of the euro, regardless of if I decide to hold a position, which, if I'm just saying, right at this moment in time, I'm basically break even on all of my dollar trades. If I took everything off the table right now, I'd basically be flat, okay? And the only reason why I would hold the dollar long is in the event that they do raise rates, and they do look like they're going to raise rates, and it looks like they're going to possibly raise rates consistently over the next coming meetings. We may not have time, it may not have an opportunity to buy the dollar. It's going to just it may just rally and then continue to rally. That's my only fear, is the fear of missing out. That's the only reason why I would hold some dollars if I decide to, and I probably will. I'll just I'll just continue to reduce size a little bit, but let's say that doesn't happen. So where's the euro go? This is an hourly chart, and you can see oh shit, I didn't mean to delete everything there. I shouldn't have deleted everything, but I did. Okay, so here, I have to draw this again. Right, you guys recall this? There we go. Okay, you guys good? You can see everything. It's a 4-hour chart, really condensed. All right, that's where we're at right now. It's a 4-hour chart. Well, my 2 cents is, if the euro rallies, let's say the dollar pulls back, we're pulling back to 114. Because if we hit 114, you can kind of imagine it happening right now. Okay, if we hit 114 today, we're going to, not only are we going to stop out people that are short, but we're going to hit that 50% retracement, previous spike lower, and I think 114 is the turning point for the euro. Okay, so big resistance for the euro to dollar today, 114, key. Now, let's say the Fed, the Fed raises rates, or whatever however you want to, you can argue this. You can argue the subject. You can say, okay, the dollar rallies because of what reason? Give me a reason, any reason. You don't have to give it to me. I'm just saying, whatever the reason is. The Fed raises rates. They don't raise rates, but it seems increasingly likely that they're going to raise rates in October. Whatever your argument is, the dollar decides it wants to rally. Well, where is it going to rally to, and where are we going to go? Well, my opinion is, if we do, here, I'm just going to extend this out. If we do sell off in the euro dollar, that sell off is going to take us to about right somewhere down here. Okay. So the possibility is that we drop down towards 112. Okay? So those are like two scenarios that I see regarding the dollar. Rally to 114, sell off to 112. I think 112 will give you a great opportunity to be on the long side. Well, I personally wouldn't want. I don't want to be long. I don't want to be long the euro dollar. I mean, if the euro drops to 112, that's going to be a good bounce spot. So if you're short the euro dollar, like again, I'm just walking it all through this scenario with you guys. Let's say the dollar rallies following the Fed, okay, drops immediately to like 112.50, okay. Then you decide to short the euro because it looks like it's going to go further. Great. If it drops down to like 112, 111.80, you might look for a bounce there intraday, and then maybe you'll turn back around and sell off because it depends on the reasons. What are the reasons it's going down? But I think down to 112. Actually, let's let me be a little bit more specific here. See, 112 of this last move is the 618. Hourly, by the time we get there, realistic, yeah, I guess 112 is not an unrealistic target. Okay, so that's what I would be thinking. If the euro fell to 112, that's probably going to be a good bounce spot. Again, you have to understand what the reasons are. And that's one of the things that post Fed, this afternoon, as I'm you know, trying to figure everything else out. It's happening in my personal life. But post Fed, it's kind of like just like going through everything that was said, what they had announced, and trying to figure out, okay, that is, that's the reason why I'm selling the euro or buying the euro, or selling the dollar and buying the dollar. Okay, so it's not as black and white as oh, I'm buying the dollar because the Fed raised rates. I'm selling the dollar because they didn't. There's a lot more to this equation, okay, that we'll have to figure out this afternoon. But I think those are places that we can look for the euro to go, okay? Because if you imagine a breakdown right here below like that spike low yesterday that was at 112.10, it might pull us down to 112, maybe 111.80 before bouncing, okay? All right, let's go take a look at the cable. So the pound, this is the one I have a little hesitation on being on the short side, and I'll tell you the reason why. And you should already know this, but if the Fed, let's say, raises rates, then traders may make the assumption that the Bank of England is going to follow suit sooner rather than later. So the pound may actually act a little bit better than the euro dollar today. It may outperform some of the other currencies. I actually look at the pound New Zealand, and I think the pound New Zealand looks extremely strong. I look at the pound Aussie, and the pound Aussie's false breakdown below 215, very strong. So the pound is my real, that's the one that I don't know if I'm going to hold a short position in the pound dollar. You know what I mean? I'm a little hesitant. Now, the flip side to all that, to this whole conversation as well, is, well, if you look at the daily chart and the cable, we've had a bounce back, and we're bouncing right back to the previous, breakdown point. All right, you can see the breakdown point, how aggressive we were right through here, and we're heading back to the 618. So the 618 is at 55.70. You go just a little bit above that to 156. And you're testing the underside of this trend line. And remember this, I may be totally miscued drawing here. We can probably bring that down just a hair. So this 55.70 could be a real key, resistance. Because if you look at it, let's see here. Spike high. Now I'm going to match it from here, because that low right there was off Friday late in the day, at the end of the day sell off, so it was after the market had already closed, so the bid dropped. So you don't measure from that wick, because MB Trading, my broker, the charts still work after the market closes on Friday, because the market's still kind of moving. So I kind of dismiss those late Friday afternoon moves, because it's just illiquid and it's just people trying to get in or out. But 155.75. I'm gonna put it all the way up to 156. I think that's whoops. 156 is resistance today. Okay. Support. So the cable, real crazy moves this week. I mean, the pound's been resilient here. Um, okay, the pound's been really resilient. You can see how we've you know rallied into new highs. Relative strength is diverging. We could very easily get a pullback, but from 155. But how far do we pull back here? I mean, it's a tough call. I'm assuming that we'll find some support on the way back down. It's just a question of where. Um, this 153.30 is going to offer support, obviously, but I would also assume that we're going to hit support way before then too. Um, I don't want to make the assumption that that was the high, but I saw a lot of people get squeezed out of the pound this morning, so I'm thinking that that spike high was pre-FOMC. I'm going to screw you move. That was happening just before I came on the morning edge. I just saw the cable racing up there, and I was like, oh, it's just squeezing out everybody who's short. Um, so I don't want to make the assumption that's the high, but I hate doing that because I'm not convinced that this is the high yet. You know what I mean? Um, I mean, I would assume any move back down towards 154 is going to find some pretty good support, or 154.20, but this is a hard call. Like looking at this chart, it's a really really um, tough call. I mean, I will write down 154, but it's not major by any stretch of the means. It's just kind of like eyeballing it. Um, you got some spikes around here, a lot of congestion down here around this 154 area. You can see, so it's not great support, but I think if you got down to 154, that'd be a bounce spot, because it's going to be some sort of nice retracement from here. So even if we go here or here or here, even if we make marginal new highs, 154 is still going to offer some support down here. Okay. All right. Let's go over to the Swissy. The pound is definitely not cut and dry. And sometimes they are, but sometimes they're definitely not. So the Swissy found support again down here. We've been writing down 96.70. I know Zigster, he bought some at 96.70. Now I own some Swissy at just above 97 cents, at 97.06 is where my cost average is. So I own it like right here, like right there. Um, we've had a really good rejection all week from this resistance. You can see it right through here. So any move up to 97, let's just call it 97.50, should find some sellers. But if we can break above this, 97.50. I'm going to put an asterisk here. If we can break above that, I think I'd be pretty confident that we're going to make a run for the highs. You know, the 98 and quite possibly, you know, 99 cent level. You know, which is, you know, for obvious reasons, these are real big breakout points that I'm looking for. All right. So if for some reason the Swissy starts to race through that 97.50 level, that's going to be pretty big. Now I don't. I know we have our support written down at 96.70, but I don't. It's too close to where we're at today. 38% retracement comes in at 96. So it's 96.05, but we'll just write down 96 cents. That should be really key support. Let's say the dollar does come under pressure today, following the FOMC decision. A move down to 96 should offer, you know, an area to be on the long side of the Swissy if you want to be a buyer down there. Okay. Here's the yen. Now the yen, we rallied to the resistance we wrote down yesterday, which is 121. Well, you know, if you look at what we drew yesterday, you know, if we rally up to 121, should have some resistance. We're there. Okay. Right. So the question is now, let's get rid of all this stuff here. Let's assume we get some dollar strength. Okay, so if we get some dollar strength, remove this stuff too. At this stage in the game, this is something that I was when I was on line with Dale Pinkert of FX Street the other day, talking about a rally back up towards 122. Man, I think it's possible that if we break here, we can break pretty aggressively. You know what I mean? It's if we break through 121 and change, you know, 122 is possible, especially on just even a little false break above this resistance. So, you know, I think it's doable. Let's go back to the daily chart here. Okay, now any rally up towards 122, that's going to be a good place to be on the short side, I believe. Okay. I'm going to go with that number as being really key resistance. 122 key resistance. And I know looking at it, you go, well, is it still bearish? I still think it is. That was a very aggressive, bearish, aggressive breakdown. Okay. Now, it doesn't mean that we can't break out to the upside right now, but I think it's one of those things that if we do break out, if we get to 122, I'm shorting it. Let me just put it that way. Okay. We get to 122, I'm going to get on the short side. Now, where is the support? Support's going to be back down here at 120, because if we sell off, we're just going to hit support down here, 120, 119. Let's just call it 119.80, and I can't draw a fib there because I don't know if that's the high, but 119.80 should offer us really good support. Because remember, the dollar can sell off following the Fed. You know, doesn't matter if they raise rates or not. The dollar can still pull back. All right, let's go over to the Canadian. Now the Canadian, it broke through this support. We've had this nice little tidy channel that we've been following. We broke through that support, and I think a lot of that had to do with crude oil up 5% yesterday. I mean, it was bound to weigh on the Canadian. But, do you write off the Canadian dollar? I don't think so. I mean, if you look at the Canadian, it's still, I mean, let's go to the monthly chart really quick. You see that dotted line? The dotted line's at the high at 130.65. Okay? So, frankly, going into even a 4-hour chart, while we're above that dotted line, it's bullish. Yeah, I mean, it could pull back here, but it's still bullish. If we could pull all the way back to that 130.70 level and still be bullish on a monthly, weekly basis. Okay. So I'm very skeptical about writing off the dollar Canadian. It does look a little hampered here because obviously of the break yesterday. But then again, this is pre FOMC moves. Okay. So if the dollar Canadian pulls back, we're going to have support at right here at 131 and a quarter, but really at 130.70. It's going to be real key support. Okay. So dollar Canadian support 130.70, 131.25. Okay. Resistance is still at, well, it's way up here. Because what we may be doing is we may be just range bound now, right? So any rally back up to here is going to find resistance. So 132.80 for today. And I think that's all we need to write down for today is 132.80. On a spike up, if you get a spike up and you're like, oh, I want to short the Canadian into that spike. Now I still think it's bullish overall. Actually, you know what? I have to take that back because we popped out of that. Channel. It's range bound, but it's overall it's still very bullish. It's just we're kind of range bound at the moment. That could change. Obviously we can go right back to being in a bullish trend after today, but for today we'll just put it as more of a range bound. But if we do rally up to 132.80 and you're like, well, I want to be on the short side of the dollar no matter what, selling it up here makes more sense. Okay. Let's go to the Kiwi. Let's do the Kiwi really fast before our break. So here's the Kiwi. Yesterday's New Zealand GDP came in weaker than expected, 0.4% versus 0.5% expected. The Kiwi came under some pressure, bounced back up, but overall, take the high to the low, 618 is really still holding. Spikes up to 63.75 are still holding. The 786 will be 63.88. That's from the high to low. I mean, obviously, I can write down 63.80 because that's where the problem is. Now, today though, because it's an FOMC day, because the dollar could substantially weaken today following the Fed decision, we could get a rally back to 164. But if we get a rally back to 164, I think that's going to be a great place to be on the short side. Sell-off, obviously, we're going to find support down here at 62.40. So I'm going to write down those two levels. Oops, hold on. I don't know what's been happening. This mouse, sorry, mouse is it's been acting up recently. I'm not too sure why. I probably need a new driver, I'm sure, but it's not something all I do is unplug it and plug it right back in when I'm done. 64, 62.40, 62.40. That's pretty massive support. 64 cents. and it's still in a bearish trend. Okay? All right, when I come back, we're going to do the Aussie. We're going to do the dollar index. We're going to take a look at the Nordic currency, so don't go anywhere. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar, so we're going to finish up with the Aussie dollar. Let's go do the Aussie, the Kiwi. We'll take a look at the Nordic currencies as well. So here's the, oh, we already took a look at the Kiwi. So here's the Aussie. A couple things I want to point out with the Aussie dollar. First of all, it's kind of weak today. It's weakened, overnight. I think the failure at 72 cents was a big deal. Now, I was going to try to tweet out this chart yesterday, and I couldn't get it to shape up the way I wanted to. But here, this is the weekly trend line that goes from the lows in 2001 to 2008. Then we broke that, and that comes in at 72. Remember, we broke it, and I said we could rally back to 72 cents and fail. Well, we did. We rallied back to 72 cents, and we're obviously showing failure right now. Now, obviously, we can still get back towards that 72 cents, especially if we see some dollar weakness following today's meeting. But what I'd like to do is I'd like to actually measure from, and let's get rid of all this stuff, because if we measure from these highs over here, wherever the last higher high was, which was right here, down to the low, we got to figure out what these fib levels are, because remember, we have this inverted head and shoulder pattern. Target still comes at like 72.50, 72.40. So go to this high to low. See, we still have unfinished business up here. So if the dollar does weaken today following today's Fed meeting, there's still the possibility we rally to 72.35 as the 618. It's also the measure of the inverted head and shoulder pattern. This head and shoulder pattern right here. Shoulder, head, shoulder, target, right? 618. See it? Okay. So resistance is key. 0.7235. And that will be a key level of resistance. We are in a range scenario. We came out of the, once we came broke above 71 cents, we put us back in a range environment. Now let's imagine the dollar strengthens aggressively following the Fed decision. Where are we going to go to? My assumption is somewhere down here. So by the time we get there, be that low right over here, 70.35. That's where really key support comes back in. 70.35. Okay. 71.35. That's 72.35. My bad. Typo. Okay. Let's go to the dollar index. Okay. So here's the dollar index, and I think we've been writing down, and correct me if I'm wrong, 95.80. I think maybe 96. We wrote down like 96, right? Because high, low, 618 comes in at basically 96. Support is going to be today, key support is going to be at 94.90, 96, 94.90, 94.90, 96. And we are range bound. Okay, let's go over to the peso. So the peso did end up getting down towards the 618. Talked about this little wedge, about us getting down here, and you can see previous resistance acting as current support over here. Okay. For those of you trading the peso, I'm probably not going to write this down. Let me get rid of these things. Well, maybe I will. It's really tight. I mean, it's not very far from where we're at. I mean, that's the thing. 1647, 1670. I mean, you can see this is right here. Resistance here, support down here, breakout point there, breakdown point here. Okay. A lot of different scenarios as we tighten up with the peso. I don't trade it, but for those of you guys that are trading it, I think I would look at it something like that. Something like that. Okay. Norwegian krona. 807. Do we have to write this down again? 842. 807. All right. For those of you guys that try, since I know I have people from Norway listening in, Jonas, 8.07, 8.42 range. I mean, I say range because we've been stuck in this range, but remember it's in a very, very bullish trend at that as it is. Swedish krona. Really key support down here, but we're not even anywhere close. I don't know if there's anything to do with the Swedish krona. You just kind of trade it as the euro, as like a proxy to the euro. For those of you that trade the Swedish krona, the euro rallies. Swedish krona is probably a good short. The euros, sells off. The U.S. dollar Swedish krona is probably a good long. Okay. There's your bias chart ahead of the FOMC. It is done. Finito. All right, let's take some of your questions.